It's too late. It's over. You cannot get out of this debt spiral. It is locked in right now. In 4 years, at the next Bitcoin halving, I'm very confident, not certain, but very confident that the price will be substantially higher than it is now, measured in fiat dollars. $2 million in today's dollars is exactly the same as Michael Saylor's prediction of $13 million in 21 years. See, because I just said today's dollars.
Crypto markets tend to go bananas. So that is, we're talking currently the total market cap of crypto is about $2 trillion. By the end of this cycle, it'll be at 10 to 15 trillion. I mean, that's la-la land returns.
Greg Foss starts his argument by focusing on the undeniable reality of the global debt spiral. This concept, also championed by financial expert James Lavish, suggests that governments are caught in a perpetual cycle of increasing debt and reliance on printing money to finance it. Foss notes that fiat currencies, including the US dollar, are guaranteed to face significant debasement due to this relentless money printing. Foss makes a bold prediction that Bitcoin could reach $2 million in today's dollars, aligning with Michael Saylor's longer-term projection of $13 million in 21 years. The difference in these figures boils down to compound interest, which Foss describes as the eighth wonder of the world. This concept plays a critical role in understanding how debt accumulates and grows exponentially, particularly for governments.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
All I try and do is smooth out the short term and look in the long term. And in 4 years, at the next Bitcoin halving, I'm very confident, not certain, but very confident that the price will be substantially higher than it is now, measured in fiat dollars. And why is that? Well, it could be because Bitcoin, as measured in fiat dollars, could be a lot higher for two reasons. One, because of the debt spiral that James Lavish has done a great job of pointing out. Preston Pish had a guest on his recent pod measuring M1, the monetary base, M1, M2. In all the M's, the fiat currency will debase with 100% certainty, okay? Because they need to print money to buy the debt. That is the simplest trade I've ever seen. So as measured in fiat, Bitcoin can get higher price in Bitcoin just because the value of the fiat debases, right? Otherwise, why could Bitcoin go higher? In isolation, because you have banks that are going to custody Bitcoin. You have the corporations like MicroStrategy that are going to put Bitcoin on their balance sheet, and you're only getting 450 Bitcoin produced per day. And if all of a sudden the demand side of the equation is 900 Bitcoin a day, where does the price go? So pretty bullish outlook. But as Jeff Booth says, we need to start using Bitcoin as a medium of exchange to make it, the velocity of Bitcoin, a reality. My prediction of $2 million in today's dollars is exactly the same as Michael Saylor's prediction of $13 million in 21 years. See, because I just said today's dollars. All he's done is put compound interest for 21 years on $2 million to get to $13 million. Or not him, but that's how the math works, okay?
Yeah.
So compound interest is the eighth wonder of the world. Somebody said that. I don't know who it is, but it is true. It's an exponential growth of your debt because of compound interest. It's too late. It's over. You cannot get out of this debt spiral. It is locked in right now. Someone said, somebody pretty smart, I can't remember who it was, on Twitter.
I think it was Albert Einstein, or it's attributed to him.
Okay. What I saw a Twitter tweet that said, Just sell all the land in the USA and deflate the US budget deficit or debt to zero. Sell all the land. Okay, who's the buyer? Who out there has $35 trillion to buy all the land in the US?
Right.
Nobody.
No, it's
Nobody
like
has this.
it's already insolvent. The debt is insolvent.
It is very predictable over the long term. Over the short term, over the next 2 weeks, 2 months, I mean, you have a U.S. federal election. The volatility around that is going to be very interesting.
Right.
I'll leave you with the word stagflation. I hope it's not true, but it's something that very few people have lived with. Just be careful. Bitcoin isn't the only solution. I think Michael Saylor agrees that Bitcoin isn't the only solution. He only sees Bitcoin capturing 7% of total financial assets over the next, what was it? I think he ran it for 21 years or something.
21, yeah.
Like, he sees he talks about people still wanting apartments in New York City. And the truth is, there is a potential for the U.S. debt machine to grind to a halt where an auction fails. And then it's like the bug hitting your windshield, right? It's like, oh my, bang. I thought I was in good shape, and all of a sudden, it's a calamity. So the people that do know, they don't want to acknowledge that this 35 trillion of debt. Now, this is so funny because in 5 years, that 35 trillion of debt, just by pure mathematics, is going to be 60 trillion.
Oh, yeah, for sure.
And that will equate to 170% of GDP, US GDP. And as Luke Groman points out, and others, no nation in history that spends more money on their interest expense than their military expenditures, which the US just currently passed, where interest expense on the debt is only going to go higher, and military spending is going to struggle to maintain its current level. No nation that has experienced that in history has not failed. So, and I'm fairly confident between now and next year, this thing is not going to go off the rails. Can I say between now and 20 years from now, where Mr. Saylor is still confident that Bitcoin will exist in parallel with the US dollar? Certainly, I hope that he's right.
Raoul Pal also shares his thoughts on the broader crypto market, predicting that the total market cap of cryptocurrencies could rise from its current level of around $2 trillion to between $10 trillion and $15 trillion by the end of this market cycle. While these numbers may seem like la-la land returns, Foss reminds us that such explosive growth is characteristic of the crypto space. He also touches on the performance of other asset classes, such as commodities and precious metals, which are beginning to see a rise in value. This is driven by inflationary pressures and increased liquidity in the system as central banks lower interest rates and inject capital into the economy. According to Raoul Pal, this creates a market utopia where all sectors, including stocks, commodities, and crypto, see substantial gains.
Crypto markets tend to go bananas. So that is, we're talking currently the total market cap of crypto is about $2 trillion. By the end of this cycle, it'll be at 10 to 15 trillion. I mean, that's la-la land returns. I mean, but that's crypto. Crypto gives that kind of opportunity. The NASDAQ's been following this perfectly. So it just keeps going, whether we get another 20%, 50% upside in the NASDAQ, or it could be more. We don't know. You can't really tell. But the point being is the gains are huge. We'll also see commodities picking up. We'll also see, we've seen precious metals picking up. We'll see all parts of the economy and the stocks picking up as the economy's growing. Inflation's not yet a problem. And the central banks are cutting rates and adding liquidity to finance their debts. That's utopia. That's what crypto's macro summer and macro fall. It's basically market utopia. Large group of people who want their justice. They want the system to fall apart, to say, I told you so. You're printing money, you're creating inflation, you're doing this. It's all unsustainable. And they don't want to see that what's actually happening, this 8% debasement, is basically all of us being charged 8% for a put option on the system, which is actually maybe not that bad. But they don't want to see it. And then a lot of people who aren't invested in technology can't stand the fact that it outperforms versus what was deemed to be the right way to invest, which was the value investor, the cyclical commodity, deep value, that thing. And that's not been working for 30 years. But yet they want it to come back. So they get more angry as markets go. And then they start drawing patterns about how it's going to crash. Well, markets, unlikely to crash unless it's further out the risk curve. But markets don't crash when the business cycle's picking up. They crash when the business cycle is slowing down. And let's say the ISM crosses 50. It never happens at this point of the cycle. So really, there's no real rational argument. And the Fed are cutting rates now. They're pushing liquidity into the system. The market's buoyant, and the ISM is going to start picking up. All the forward-looking indicators are. So it's really difficult to argue that there's a bubble and it's going to pop. And when we get to the bubble argument, something else they miss is they look at price earnings and they say, see, price earnings keep going up there. It's getting wildly expensive. But price and earnings, if you remember the story of your earnings and house prices are always going up more than your earnings. Well, what is price earnings? It's the share price, which is driven by debasement, and corporate earnings, which are driven by GDP growth. So over time, as we add liquidity into the system, the everything code suggests that price earnings will keep going higher because of this dynamic. But people don't understand it. So they look to a world of the past. Now, this has actually all been done before. This is not a brand new thing. After World War II, this is what they did. They used yield curve control as a way of stimulating the economy, and they essentially grew their way out of it by refinancing the debts. And we had exactly the same 4-year cycle back from about 1948 to about 1968. So we had 20 years of it back then.
Raoul Pal paints a compelling picture of Bitcoin's future as a critical asset in a world of escalating debt and monetary debasement. While the path forward is fraught with risks, including the potential for stagflation and a failed debt auction, Pal remains confident that Bitcoin's fixed supply and growing institutional interest will drive its price significantly higher. As we navigate through this turbulent financial landscape, Pal encourages us to consider Bitcoin as a hedge against the systemic risks posed by the fiat-based financial system. The long-term outlook may be uncertain, but one thing is clear: Bitcoin is poised to play an increasingly important role in the global economy.
Please like and subscribe my channel.